Hi everyone, let's cover my Elliott Wave scenarios on Bitcoin, starting with the most bullish scenario where we want to see a 5-wave impulsive structure to the upside followed by a retracement. Wave 2 only retraced to the 0.236 Fibonacci taken from the start to the end of Wave 1, which is a very rare target for a Wave 2. I've only seen it twice, once in 2023, once in 2024, so it's not impossible, but it does negatively impact the probabilities for a Wave 2 of a bigger impulse. In this scenario, we are working on Wave 3, and inside Wave 3, we have the count 1, 2, 3, 4, 5. Working on Wave 4 in that case, 0.236 to the 0.5 is your common Wave 4 target, taken from the low of 2 to the high of 3, giving you a target between 92.6K and 90.4K, with the invalidation at 89.4K. In this area, we have a bit of support, being the daily naked point of control at 91.6K, and also just simply the previous range over here on a 1-hour time frame. After Wave 4, we're looking for another move to the upside in a Wave 5 to finish Wave 3. And after 3, we want another, preferably bigger, sideways range in a Wave 4 that matches this Wave 2. After 4, we then get one more push towards the upside. Something that's also interesting is that the 1.618, which generally is a common target for Wave 3, is not yet touched, and we are not close to the 1.618 as well. Now, it's not that the 1.618 for a Wave 3 has to be a minimum target, but what is a rule in Elliott waves is at least that Wave 3 can't be the shortest wave between 1, 3 and Wave 5, so that is something that we have to keep an eye on. If we then go to still quote-unquote bullish but eventually bearish scenario, we're looking for a zigzag ABC. In this case, we also want to see price moving towards the upside. Discount over here is actually exactly the same. You look for a 1, 2, 3, 4, 5 as well. But after you finish this Wave 5, you're finishing a Wave C. And after a Wave C, you look for a bigger retracement to the downside. So not another Wave 4 and another Wave 5. No, you create a bigger retracement. Target area is the same, support is the same, invalidation is the same. Target area for your Wave C is between the 1 and the 1.236, a trend-based subextension taken from the start to the end of A to the end of B, which gives you a target of 94.6 to 98.4K. Another target still for a Wave C, even though it is a bit less common, is the 1.618 at 102.8K. Would be quite a stretch because in this case we would preferably be looking for the next move up to be a Wave 5, so it has to be quite a long Wave 5, but never say never. In this area over here for Wave C, we do have some additional resistance, the blue box between 95.5 and 96.6K. We also have a daily naked point of control at 98.2K, and in confluence with the 1.618 is this white box 102 to 103K. Now, in both of the previous scenarios, price moves towards the upside, which basically means they are both quote-unquote bullish, I suppose. However, you always need a bearish scenario as an Elliott Wave analyst, and that is what I present to you over here. Now, this scenario is a double zigzag, a WX, and then a Wave Y. And after Wave Y, you look for a bigger move towards the downside. Generally, you expect the low to be taken. It starts with a Wave A towards the upside, followed by a WXY, a sideways double combo. Wave W in this scenario is a flat ABC, with Wave B touching the 0.9 Fibonacci, which is a minimum target for a Wave B in a flat. Then we get a Wave ABC to the upside in Wave X, followed by a zigzag down in a Wave Y, creating a flat zigzag zigzag WXY. Wave X also retraced to the 1.236 to the 1.38 Fibonacci, which is for a Wave X a common target if a Wave X would move above the origin of Wave W, which it did in that case. And then we have a Wave C to the upside, we get our sideways Wave X, and then another A, B, C towards the upside. So interestingly, in this scenario, you then look for price to move towards the upside, which means that the reaction at support is going to be important. So we have the daily naked point of control, the range over here. We also know what the common target is for a Wave 4 and where the invalidation is. So what we want to see for the bulls basically is price to find support move towards the upside, and preferably reaches at least the daily naked point of control at 94K, because it also is in confluence with the 886. And the 886 is important just to make sure that you can't get a double 1-2 here, right? A wave 1, 2, 1, 2, 3. Wave 2 that reaches an 886 is incredibly rare, so the moment you would touch 93.9K, probabilities would be higher that everything here is a wave 4, without counting all of the lower time frame stuff over here, which generally I don't really enjoy to do. So just keep an eye on the areas of support, look for signs of strength, and then a move towards the upside can be very interesting. I think from a probability point of view, based on the analysis, that the either zigzag or the bullish scenario has a higher probability, where we look for a wave 4 and still a 5 towards the upside. But it's always nice to get a bit of local confirmation as well. We also have some news today, Thursday, April 24th at 2:30 p.m., 4 p.m. I don't really expect fireworks on the chart. Usually this stuff doesn't really create a lot of volatility, but it's at least good to know. And I will be live this afternoon also because later today this video will go online. My interview with Crypto Princess about my story. It's about 52 minutes in length. I explain a lot about what I've done back in the day, what I'm doing now and everything. So make sure to check it out. And through the live stream, I can eventually forward people into this video if you like to check it out. So let's then go to the polylines and the probabilities. From a probability standpoint, the probabilities haven't changed compared to the previous update. At the moment, they are higher for bigger corrective structures, which basically means that on a zoomed out time frame, we're still looking for bigger corrective structures. And locally, as long as you don't form at least a 5-wave impulsive structure, which we don't yet have, followed by a 3-wave corrective structure, the probabilities are higher for a bigger sideways corrective structure. Only when you see this 5-wave up, 3-wave down, do the probabilities change to bullish for price to take out the high and then possibly also the all-time high. At the moment, it looks unlikely that this structure to the upside will just go straight up and take out the all-time high, as from an Elliott Wave point of view, it makes a lot more sense to count this as either a 5-wave. Currently, we're working on a couple of 4-5s, so we expect a range, a grind over here, and then eventually return to the downside. Or, of course, for the bears, an ABC towards the upside, which is bearish. You also expect eventually a bigger sideways range. WXY is the most bearish scenario, but does have a bit lower probabilities compared to counting this as a wave 4 and look for another 5 towards the upside. So that is something that I personally will keep an eye on locally. Now also for the bulls, of course, wave 2 hit the 236, which is very rare. Wave 3 did not touch the 1.618 as a common target. And you need a minimum of 5 waves up, which we don't yet have. If we do get 5 waves and then a 3-wave move down, 1, 2, 3, 4, 5, 3-wave down, that is the moment where probabilities will change in favor of the bulls. I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.